Okay, folks, let's look at the Zoopla UK House Price Index and what's going on in there. This is the UK House Price Index for Zoopla for March 2024. And this is according to Zoopla, what's happening in the property market. They've got a good insight into this, actually, and it's purely for the fact that they're one of the biggest data collectors of property information right throughout the whole of the UK itself. Because they get all the real-time information about what's getting listed, what's getting sold, what the demand is, how many people are clicking through on their properties. So Zoopla's got a great insight, a huge insight. They've got a good real-time information as opposed to the UK House Price Index and the Scottish House Price Index, which actually has historic information over the whole of the UK as well. So if you combine the Zoopla data with the UK House Price Index data, it actually gives you a real good idea about what's going on in the UK property market, as well as the Scottish property market and the Fife property market itself. After all, that's what we're on here to talk about. So let me just get started. I'm just going to do a bit of housekeeping and get on with that, and then I'll show some graphics here, just as I share my screen. Here we are. Okay, this is the headlines here right now. So according to the executive summary for the UK House Price Index for Zoopla, they have annual house price inflation slows to minus 0.3%. That's not a huge amount. That's just a stable market. Up from minus 1.4% in October 2023. Market activity improves across all key measures led by sales, which are 9% higher than a year ago. So year-on-year sales are actually 9% higher, as you can see there, according to the executive summary for Zoopla. More sellers coming to the market, and stock for homes for sale up 20%. Market activity improves all areas and key measures in sales, as I said. House price inflation higher than Q3 of 2023, all areas, but still negative in southern England. So what you're seeing right now is the UK House Price Index, according to Zoopla, according to their index, and it's minus 0.3%. But that doesn't reflect in Scotland, and I'll talk about that towards the end. Now, we're going to be with us for about 20 minutes, and then we're done. But it gives you a real good insight into what's happening in the property market itself, especially if you're selling, especially if you're buying. You're maybe considering, will I wait? Will I just buy now? Will I sell now, or will I wait to sell later? But this gives you a good insight into that. So they then go on to say Zoopla, the percentage of asking price achieved is narrowed from 95.5% in November 2023 to 96.1% in March 2024. So sellers are accepting a medium average discount, to asking price of £10,000 down from the £14,250 in November 2023. And 2024, according to Zoopla, is set to be the year of better sales volumes but flatter house prices, according to Zoopla. Let's look at a wee graph and let's talk about this, about these flatter house prices that they're talking about. Where are they, and is it reflective right throughout the whole area? Here we are here. Here's some of the data here, as you can see. Buyer demand up 4% year on year. You've got number of sales agreed up 9% year on year. You've got the flow of new supply at 11%. You've got the stock of new homes for sale up 20%. So there's more properties coming to the market than there was before. Sales market activity continues to improve. All primary measures of sales market activity continue to show positive upward momentum. New sales agreed are 9% higher than a year ago, with 7% more home sales agreed over Q1 of 2024 than over Q1 of 2023. This trend is encouraging, according to Zoopla. More sellers are bringing their homes to the market. The average agent has 11% more homes on the market compared to the last 4 weeks than they did at this time last year. Overall, there are 5th more homes for sale than last year itself. So more supply means prices start to stabilise. So improved housing sentiment is down to faster real wage growth and a healthy jobs market overall, both of which are boosting consumer confidence between buyers and sellers. The latest GfK survey finds that the consumers' confidence about their personal finances hit its highest level in more than 2 years. That's quite encouraging, actually. They're at the same point, the mortgage rates have fallen to 4.4% for a 75% loan to value for a 5-year fixed rate loan, down by over 1 percentage point from a high of 5.8% in June of 2023. So that's encouraging as well. Mortgage rates are actually dropping, even though base rates aren't dropping. It'd be interesting to see when the Bank of England start to drop base rates, if inflation starts to drop as they predicted, the OBR, the Office of Budget Responsibility, predicted, whether that's actually going to come to fruition or not, if base rates drop and mortgage rates drop as well, because mortgage rates are dropping regardless of that, because the swap rates between interbank lending is actually historically low in comparison. So Zoopla then go on to say activity is up across the board, with the strongest growth in sales areas and the more affordable housing prices, such as Yorkshire and Humber, 11%, and the Northwest at 13%. The strongest growth area in new sellers listing homes in the Southwest is 28% more stock on the market in the Southwest of England, Northeast of England 26% more. The supply of homes for sale in London is only 8% higher, explaining why price inflation has rebounded faster here in London than other regions itself. So house prices firming rather than setting, rather than set for faster growth. So house prices are firming rather than being set for faster growth. Let me just show you what's going on here, over right across the board here. Downward pressure on house prices in the south remains. So there's February of 2024. There's the purple versus last year, August of 2023, which is the black there, and you can see there the downward pressure on house prices in the south remains. So here we are here. So the south is over here, but look at Scotland. Look at August. Scotland house prices were up just over 1%. Now they're up 2%, as this was. So that's what I said. Scotland is very, very resilient. And look at Northern Ireland, they're up 4% still, and yet they're up 2% in August 2023. So that then comes back to saying, are we set for a boom in Scotland and possibly in Fife itself? So let's read on. The annual house price of UK inflation, according to Zoopla, remains negative 0.3%. Up from the recent low of minus 1.4% in October 2023. This is a clear divide across the UK, as the southern regions continue to register annual price falls, led by the eastern and southeast at -2 and -2.3 regions. The prices are rising the most in Scotland and Northern Ireland. All areas are recording higher percentage price inflation than 6 months ago, as sales volumes recover and pricing levels are firm, and Zoopla expect the current trends in pricing to continue in the second half of 2024, as prices continue to adjust to higher mortgage rates and reduced buying power. So then they go on to say that 2/5 of sales agreed are at greater than 5% below the asking price. Now, this is a historically an English thing, because Scotland, based on home reports, and pushed their way up, whereas England have let's go for the highest point, way beyond what a home report would reflect, and actually come down as a result. Hence the reason why they're saying 2/5 of sales agreed across the UK are greater than a 5% below the asking price itself. So don't panic, people in Scotland and in Fife itself, and across in Glasgow and Aberdeen and that. The fact that Zoopla actually go on to say the fact that buyers and sellers are agreeing more sales is actually quite positive, and the evidence that house prices don't need to fall further to support the continued recovery in sales. So there's clear evidence that house prices don't need to fall anymore to support the continued sales that are going on right now. So buyers remain price sensitive, however, and they continue to negotiate on price in England. 2/5, 41% of sales agreed in March were at the sales price. There was 5% or more below the asking price on Zoopla's website. This has improved from closer to half the sales of the quarter of 2023. So it's actually an improvement, but remains high by historic standards. It supports Zoopla's view that also house price inflation will remain broadly static over 2024. So let's have a wee look at this in graphical form. Here we are right here. So this graph actually shows the discount to asking price narrows. So here is the asking price up here, and here is the time it takes. So you can see over the years the discount to asking price. Asking price is up here at 100%. That's what you're getting. So when we're in the boom market in 2021, 22, and 23, you were always getting the asking price you were getting, basically. But what's happening now is before then and after then, you're just getting a wee bit less. It's not huge amounts less, but remember, as I said before, It's across England. But see, from September 2023, it was at 95. Now it's at 96. It's gone up. So you're getting less of a discount in terms of what your asking price is itself. So that's good news for sellers, definitely. So discount to asking price narrows in the first quarter of 2024. Well, the recovery for sales, Zoopla have reported since last November, is aligning to a narrowing discount between the asking price and the agreed purchase price. Further evidence of improved market conditions. The average discount from the initial asking price to agreed purchase price itself has narrowed from 4.5% last November to 3.9% in March of 2024. This is the lowest discount since July 2023 and in line with the pre-pandemic average. So we're kind of recovering to where we were before all this happened with the pandemic and everything. It seems so long ago now. In monetary terms, what this means really, across the UK, remember, is the average seller is currently agreeing a sale price that is 10,000 below the asking price that they're asking. That's a bit different from Scotland because Scotland's higher. The figure is 14,250 last November, so it's only 10,000 now in March 2024. Zoopla goes on to say then, this reflects a combination of one, greater realism by sellers on where to set asking prices, and two, growing buyer confidence overall. Now, this is a national trend across England. The average discount to asking price remains larger across, for example, London and the South East, which is 4.3% or 95.7% the other way around of the asking price achieved, where house prices are higher and still posting annual price falls. We'll see a graph towards the end about that. Across the rest of the country, the average discount to asking price is 3.4%, which is 96.6% of the asking price achieved. So it goes on to say then there's greater choice for buyers, which keeps pricing itself in check. In Zoopla's view, it was that a greater availability for homes for sale will also keep prices rises in check. So the more homes come on for sale, the less likely it is for prices to go up in terms of house prices and stabilisation. We're probably moving from a seller's market into a balanced market, especially in England. That's probably a balanced market right now. But in Scotland, we've still got kind of a seller's market right now because we're still up round about the 4% in terms of average house price increase year on year. Okay, the average estate agent has almost 30 homes for sale now in return to pre-pandemic average. This means that buyers have more choice and room to negotiate, especially where homes are failing to attract buyer interest at a timely manner. This then tells me that sellers should be more and more aware that there's more choice for buyers to actually choose from. So be careful you don't actually hang on and hope for the best and think that you're going to get this magical number you've always wanted to have. I had this conversation with somebody who was wanting £1 million for their home. And I said, so if somebody came along and said they were going to give you 975,000 for your house and it's a cash deal, in other words, you can move anytime you like and the deal will be done, the money will be in your bank, would you agree? And they went, no, I'll hold it for £1 million. 25,000 a difference in the scope of 975,000 in your hand. And they only bought it for significantly less. That's a risky strategy at this point in time. Okay, Zoopla going to say they find a third of homes for sale have been on the market for more than 3 months and are still listed at the initial asking price. Keen, remember to realign your price after a period of time. You need to realign in order to introduce your property to another audience in another market. These are potential candidates, remember, for a possible reduction in asking price to attract more buyer interest, as Zoopla's just said there. This is purely at the discretion of the seller and the sales price they require to unlock the next home move. Remember as well, the next person that you could be buying from could potentially be up for negotiating as well. So while you're accepting just slightly lower than what your aspirations were, then potentially the person that you're buying from could be accepting slightly less as well. So it's a trade-off. This is the classic example about, you're getting 10% in the boom market, and it's like, well, I'm wanting 10% more for my asking price, but I tell you what, I don't want to pay 10% more for what I'm buying. Well, that's not equilibrium, and it doesn't work like that. Your house is just on the market in order to trade for the next house, and generally, if you're getting 10% more, you'll be paying 10% more, and that's how the market works. So don't get caught up in that paradigm. that paradigm shift when it happens. Often a lot of people do, and the most extreme example of that was the credit crunch, where a lot of people actually held out and thought, I'm still going to get this price I'm going to get, which was, and literally the market had dropped overnight by 20%. So Zoopla going to say there's evidence that sellers need to remain realistic on pricing, as I said, and take advantage of the improved market conditions to secure a sale and move home in 2024. So here's the homes for sale per estate agent branch, and this will tell you a lot about choice. And this is what's going on right now. Now, this is over the rest of the UK. This is homes for sale per estate agent branch. Now, Zoopla know that because they've got all the stats. So look, in the 2017, it was up at 25, and then it moved up and moved up and moved up in 30 and 30 in 2019, and then it came down to 2000 and early 2020, it came down to 25, and then it went up a bit in quarter 3 of 2020 again, because pandemic, less houses getting sold, and then when the market all opened up again, you could see how it dropped like a stone, the number of properties available for sale. And this is how prices went up so much, because everybody was looking at a stage and saying there was hardly any stock to buy at all in housing here. Therefore, what happens is this will be a complete, if you turn this round on, for example, I'll just tell you, if you flip that chart, and I'll show you again, if you flip that on a mirror image, you'll see the price increase itself in the boom market and how the prices went up. You'll see the exact same graph, but the other way around. See that there? So if you flip that on a mirror image right here, you'll see where the boom is up here. So this would really be the other way around in the boom. Let's see if I can rotate that actually. Yeah, there it is there. So if we flip that and rotate that, can I flip that as well? Is that possible to flip? No, it's not possible to flip it around. Anyway, so you got the gist of it, but it was the other way around if I'd flipped it the other way. Anyway, that then shows you the stage per branch. So it means there's a lot more choice for buyers to choose from. Therefore, be a bit more canny and savvy with your pricing strategy if you're putting your house on the market right now. Don't go in with this delusion that you're actually going to get a huge amount of money over the home report value. Just go in and think, okay, this is where I'm going to be. And if that comes along, then happy days, and you get a lot more than what you expect, because then it gives you a better choice. So be quite what I call prudent. I'm trained as an accountant, so we're quite prudent in terms of how we forecast things and how we look at things in terms of economic situations, and also in terms of business plans and forecasting for our business itself. So this is the magic question that everybody wants to know. What impact will lower interest rates have in the second half of 2024? Well, rising household disposable incomes are expected to be the primary driver of improved housing affordability over 2024. Disposable incomes are projected to increase by 3.5% over 2024, while house prices look set to remain broadly flat over that year. Now, that's across the whole of the UK, remember. I still think Scottish house prices will still be up between 1% and 5%. If I was going to pin my colours to mast, I would say 3% by the end of the year. Now, this is all about timing and the scale of interest rate reductions expected in the second half of 2024. And that's the key factor that could boost market sentiment and reduce mortgage rates itself. Expectations of lower rates are already priced into fixed rate mortgages today. That's why you're getting good deals in comparison to what the bank's base rates are at 5.25. So lower interest rates would likely result in further modest declines in mortgage rates, but how far depends on how low money markets see base rates falling. So remember, the expectation of base rates has already been priced in. That's why you're getting 5-year fixed rate deals at 4.5% now, because they're expecting base rates to fall and money to get cheaper. So if they lock you in at 4.5 just now, and it ends up falling quite significantly, maybe about 2 percentage points over the next year or 2 years, then they've got you for 5 years at 4.5%. That's a good deal for the banks, but it's a good deal for a lot of people right now because it gives them really good certainty. Economists currently expect base rates to fall to 3.5% from 5.25 by the end of 2025, not 2024, 2025, which could imply mortgage rates remaining in and around the 4% plus rate. So see the 4.5% 5-year fixed rate deal that some of the banks have got right now. That's a good deal for some people out there, because mortgage rates are only expected anyway to drop to around about 4% plus. So they're not going to really drop anything below that. So if you can get that deal right now, and you're thinking I should hold off to see if I can get a better deal before I sell my house or buy another house, I think now is the time to go. I think now is the time where it's a nice, good market and it's a stable market. And I don't think that we're going to have any drastic upward swing and any downward swing either. So this could then go into support sales volumes, but would require incomes to continue to rise faster than house prices to help reset of housing affordability, especially in southern England itself. So let me just finalize this by showing you itself. And we're going to look at the overall map of the country of what everybody's increased and decreased by. So you can see where we're talking about exactly what I said about, Scotland being completely different in comparison. See, according to Zoopla, and according to Zoopla statistics, remember, Scotland has gone up 2.1% in price over that time. Belfast has gone up 4.5%, Glasgow 2.6%, Sheffield, over on my right-hand side on this screen, it's gone up 1.3%, Edinburgh 1.2%, Leeds 1%, Manchester 1%, Liverpool 1%, and then it comes down, and then we start to get into England. Even Aberdeen's gone up 0.3%. That's actually quite surprising, because they've been taking a knock for the last 3 or 4 years. So Nottingham, Oxford, Bristol, Leicester, Cambridge, they're all going down, Southampton, but nothing really surprising overall. There's no huge drastic swings. There's no red flags or anything like that. We have a nice, stable market to complete this overall summary. And that's it. Thanks for tuning in. If you've got any questions later on, please feel free to put them in the comments, or you can message us direct. Until next time, guys, I'm Jim Parker for Fife Properties TV. Bye-bye for now.